You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options House, a powerful, easy-to-use, and intuitive online trading platform that's not only fast and reliable, but comes with dedicated customer service and a great trading experience. Trade on the platform that's top-rated by Barron's and Stockbrokers.com. With completely transparent, value-oriented pricing, Options House is your all-in-one solution for options, futures, and stock trading. Plus, open and fund a new account at optionshouse.com/insider today and trade commission-free for 60 days. Options House is a member of FINRA, SIPC, and NFA. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time for another week of the Option Block, everyone's favorite bi-weekly source for all things options related. A little bit of unusual activity, some education, some what's trading, some strategy, a whole bunch of your questions, and some all sorts of other fun stuff. Stir it together. You have the tasty, delicious nectar. That is the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-scintillating Options Insider Radio Network. Quite a few programs for you guys to choose from, including about 550 or more, I have lost track, archived episodes of this fine program, the Option Block. And where can you get all of that goodness, all that wonder and merriment and education all rolled into one? Well, of course, the easiest place, the mothership, the flagship, theoptionsinsider.com. Do a lot of written stuff up there as well. So if you are so inclined, you like to read a little bit in your day, maybe some unusual activity alerts, breaking news in the options market, etc., and so on and so forth. That's your place to go. Head on over there. You can mainline all of that stuff. A bunch of people coming in all the time, discovering the radio and be like, oh, you guys have a cool website too. Yeah, we do. We do put stuff up there all the time. Been doing it for nearly a decade. So head on over there and check it out. And of course, you can always mainline the radio there as well via the Insider Radio Network tab or the call out or the player on the homepage. 3 ways to get it. Just on the website alone. If that's not enough for you, if you want to be on your favorite platform of choice, well, we're there too. The Options Insiders. Look for us on iTunes or TuneIn or Stitcher, Options Insider Radio Network, or search for your favorite program. It's all there. And of course, via our mobile app. A couple of you asking about having some issues with the iOS version. We'll look into that, see if that is indeed the case or if it's just localized to you guys. But we like to investigate, make sure everything's up to date. You can always grab the app. Available in the iOS store as well as the Google Play Store, and of course, Kindle Fire. Don't get a lot of people writing in. If you use the Kindle Fire version, write in. Let us know. We don't get a lot of people writing in on the Kindle Fire version. Everyone's always iOS or Android. But we know there's a few of you guys floating around that are using the Kindle Fire version. Let us know. And however you listen, make sure you write in with your questions, your comments. We'd love to hear from you guys, including live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via Mixlr, MIXLR. So if you're around, if you're free, if you can break away from the clutches of the bosses, or just turn the volume on your computer at your desk or you're commuting, whatever the case may be, right around 3 p.m. Central, Mondays and Thursdays. We'd love to see you guys in there. The rowdy corner of our audience, heckling us and sending us questions and all sorts of good stuff. So check it out over there. See how the sausage is made, MIXLR.com, or just follow us on social media. You can get all the links there for how to listen to the show there live. We love you guys as well. And joining me on the program today, let's go in order of people who haven't been on in a while. So that means we'll start with this guy. He also gets the nod for being the closest. He is literally right down the street. Sometimes he's sitting next to me. Today he is about a block and a half or so down the river here. If my arm was good, I could hit it probably from the Options Insider Studios. He is Steve Clausen, the chief investment strategist over there, beaming in from the Options House World HQ, a block south here on the river in Chicago. Steve, welcome back to the Option Block program.
Thanks, Mark. It's great to be here. I had to go out for some banking business earlier today and walked across to the Loop, and I think I almost melted. It is so hot outside in Chicago for August 29th.
Maybe a good day to skip the block and a half sojourn then up to the studios. Stay in the nice OH World HQ where it's nice and air conditioned, and don't melt, because the time you got here you have to cool you off again. It wouldn't be any fun. So and then beaming out a little bit farther, a little bit past the studios here in downtown Chicago, a little bit past the Options House HQ to a quiet little provincial hamlet known as Sleepy St. Charles, Illinois. Wasn't sleepy last week. He was fired up. Let's see if he's calmed down since he is Uncle Mike Tusoff from RCM Wealth Advisors. Uncle Mike, welcome back to the program. Has the weekend given you time to cool off, sir?
Yeah, I suppose it has. There's some new news on it today, which is refreshing, but we'll talk about it a little bit later. But, the one thing, if you did take the hot walk, Steve, Mark does have his open invitation for all the free beer you can drink at his studio.
Oh, Steve has partaken of our beverages.
That is definitely a reason to show up. In fact, I hope that refrigerator doesn't open up, Mark, when I'm not there before the hour is over.
We'll save it. We'll save it for the end of the show. We don't no imbibing during the show unless you're the Greasy Meatball, in which case he'll empty it halfway through the show before we're even done. All right, and last but not least, speaking of the Greasy Meatball, we have his cohort, his partner in crime, the yin to his proverbial yang, the Rock Lobster himself. A lot of you guys loving the Rock Lobster this week. Send in questions for him, so we'll see if we can get to a few of those. Mr. Rock Lobster, welcome back to the program, sir.
I'm feeling loved on the news feed, I have to say. Very, very. Somebody loves the Rock Lobster out there, which is good. So things are good in Maine.
No umbrage today.
Good. There's no umbrage. We had a great event this week. So I'm relatively short of umbrage, at least for now. And maybe Tusaw's rant will get me fired up.
You are never short of umbrage, sir. You can umber with the best of them. All right. And with that, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, like the name implies, this is the portion of the show where we break down what's moving, what's shaking, what's rocking, what's rolling out there in the broad market activity today. And it was a bit of a happy day on the old street post Yellen, post weekend. Everyone deciding, let's just bid this stuff up a little bit. The S&P up about 0.5% to close the day. Dow up slightly more. The NASDAQ up a wee bit less, only up about 0.25 percentage point or so. And of course, all this green on the screen means VIX cash easing its way back down, hovering right around the 13 handle to close the day. That's been an interesting area of discussion for us. Maybe we'll start with you, Steve, because you haven't been on in a week, so you haven't had a chance to pick your brain on this topic. But of course, Miss Yellen coming out and her crew at the end of last week, seemingly injecting a little bit of implied vol, if not realized vol, into this marketplace. As of last week, realized vol hitting a near-term low, I believe, of 21-day of about 4.92, somewhere in that range. So not a lot of actual vol going on in the marketplace, but they were pricing in a fair amount of juice, and they kept it in post-Yellen as well, which is kind of interesting. So what do you make of those developments as well as today's trading, and how has that been playing out over there on the OH platform? Are your clients coming in and just taking advantage of this surge in juice to trade away, or what's been going on over there?
Yeah, the fact that implied vols have been so low and historical vols even lower have enticed some people to continue to sell volatility, even in the face of these low implied vols. I used to have a mentor who said he actually liked buying vol when it was high and selling vol when it was low, because he told me that it was high for a reason and it was low for a reason. And finally, with the end of last week, then the comments coming out of Jackson Hole and them putting the potential next rate hike back on the table in the shorter term, we finally got a little bit of movement. Friday, we had a 200-point swing in the Dow, I believe. The Dow was up over 100, then it was down over 100, and it sort of closed in between those 2 points. And that actually showed the market could move. I have a feeling everyone was on vacation, and now we lead up to the end of the summer with the holiday weekend coming up, Labor Day, the unofficial end of the summer, and maybe people are back at the desks, and maybe, just maybe, we'll start to get a little bit of action.
There are certainly worse things. I did notice you wrote about that on the old Options House blog. So listeners, if you're not reading all of Steve's musings over there, check it out, optionshouse.com. He writes a blog over there. Today's, we'll get to that in a little bit, talking about Miss Yellen and company and all the cool things, or I guess depending on your point of view, of what they were up to last week and what that portends for the future. But first, let's turn our gaze a little bit farther afield. Let's go in order today. Let's head out to St. Charles. Uncle Mike, we know what was catching your eye last week. Your old friends Mylan moving a little bit again today. They, of course, the infamous makers of the EpiPen, getting torn a new one by Uncle Mike last week. Today, I guess after much PR heat, deciding, hey, I think maybe we could speed up that generic release of the EpiPen. The market not overall. The ending of the day up. They rallied a bit today, obviously, coming off a little bit off those highs. Ending the day up about 0.5%. They were up higher throughout the day. Got about as high as about another point or so higher, about 44.25. So getting a nice little initial boost off that, and maybe as the street starts thinking about that a little bit again, saying, wait a minute, maybe this isn't a good thing for the company, aside from the PR image. So taking it down a little bit again today. So what are your thoughts there, Uncle Mike, as well as what else is catching your eye in today's activity?
Well, I mean, I think it's good that they did what they did. There's a lot of people that have, if you just type in the company name on Google or Facebook, you'll see, I don't know if you'll see anything positive said about them over the course of the last few days, but I think that's good. But just keep in mind the medicine that is in that EpiPen costs less than $1, and it's still only a 300% markup, or 300 to 1 markup for this time. So that's kind of that still kind of gives you some perspective of it. But hey, that's the world with which we live. I mean, there's a lot of stuff that goes with it. I remember the CEO, she was saying that how she was blaming the supply chain. You look on Friday after my rant, all the supply chain people that came out and said there's no way that we make that much of the profit on the EpiPen. But the whole world is infuriated with her. That's in that realm. Democrats, Republicans. And so I think that for now, the people have spoken, so to speak, and hopefully they continue to listen. And in terms of what else is going on in the marketplace today, with everything that we have this week, there's a ton of data this week. We're going to have a long around the block today, I'm sure. But with that, we have Labor Day we have Labor Day coming this weekend, so it's kind of an interesting time to have a lot of data. And I agree with Steve. A lot of people may have ended their vacations early just because of all the data that's out this week. Not a lot. There's a little bit more action today than there was on Thursday, I would say. But what's interesting is that if you look to where the markets were right before Janet Yellen was speaking the other day, it's not really that much of a difference from right before she spoke early in the morning on Friday. So we've had some movement, but start to finish, we're about the similar spot as where we were right before she spoke. So in looking at that, we're going to have a lot of data this week. I could see some pretty significant movement this week. The only thing that really lit up my tape that might be a little bit of a surprise is silver. It's not even a huge surprise for that matter, but silver was up 1% on the day. And it's just been kind of in a downturn over the last week or two, but we did have a little bit of life in silver. But aside from that, with the S&P up maybe 0.5%, it's an up day. I mean, that's something somewhat significant, but I think later this week we're going to see some more movement with all the data with which we have. And then if not, next week everyone's back from the south of France, their tropical paradises, as well as St. Charles. They all go back to the desk.
Everyone's back from the paradise on earth that is St. Charles, Illinois, ready to rock and roll. Speaking of rock and roll, you mentioned silver. We were debating that on our TWIFO program a couple weeks ago. Silver having a brief spurt of life there, rallying hard, and you're right, kind of coming off ever since then. Getting a little bit of life again today, so we'll see if maybe silver will make it back onto the TWIFO rotation this Friday. Speaking of rotation, let's rotate out to our farthest flung chair, he of Maine infamy, the Rock Lobster himself, using up all the bandwidth in Maine today. To come to us hot and heavy on the option block today. Mr. Rock Lobster, what was lighting up the old tape, your old personal tape, as well as the pit chat today?
Well, do you remember a while ago when we channeled Sir Topham Hatt?
Ah, yes, from
all you do is cause confusion and delay. And
Thomas.
Oh
Thomas,
my gosh.
Yes.
Yellen says something, and then literally, and then what was it? Who was it? Who was the hawkish Fed governor right away and said, no, we're going to have a rate hike probably. And said, in the old days, there was Greenspan, and he said stuff. And before him, there was Volcker, and he said stuff. And that was it. And now we have all these bit players. All they are is just causing everybody It's almost like since when is Fed policy become a month-to-month thing? It is so absurd. So anyway, and that gave the VIX on Friday, what was that? Probably an 11.5 to 11.75 to $15. So it had a huge relative move. The market looked like it was going to get kind of all-time highs or close, then it backed off. So, if the point of this is they just don't want the market to really move anymore, then I think they've succeeded. They've confused everybody to such a degree. And at some point, the world has to get back to real interest rates and some sort of normalization before this all ends horribly bad. It's kind of like one of those nights. This is what I feel. You can go out, you can drink too much, you can be up till 2 a.m, and you just avoid that basically a catastrophic car crash. You're the passenger and you just survive the night. Okay?
So you're talking a random Tuesday for the Rock Lobster up there in Maine.
Pretty much. A random Tuesday, or when I was trading, maybe 4 out of 5 nights during the week. But anyway, you somehow you survived, but you got close. You got close to the fire, but you survived and you lived. And I think that's what all these central banks are doing right now with policy. Sure, it could work. This could all work, this negative interest rate thing, this absurd spending by governments when they don't tell their people they just can't spend any. Whatever the rationale they have for negative interest rates in all these countries, all the poor fiscal policies and silly EU laws that nobody can really figure out and confuses everybody. Just all this stuff and central bankers have taken them on themselves to try to fix it with monetary policy. So they're at right now. This is what I'm saying. It's 1 a.m. Okay. Everybody's loaded. They're about to get in the car. They'll either make it or it's going to end horribly bad, but they keep getting closer and closer. What I will say the Fed is trying to do is just ignore all that crap and just start raising rates and at least pretend things are normal. And, then things are going to kind of happen how they're going to happen. I think the biggest difference between now and 2008 is ultimately now all the sovereign governments hold the paper, right? One of the biggest problems during the financial, in the crash of 2008 is a bunch of banks were holding a bunch of CDOs and stuff that they borrowed money to buy, and they thought, they're going to use their balance sheet and juice their returns, and all those really smart CEOs are going to make big bonuses, and it all went horribly wrong. But now the federal government owns the paper. You know what? They don't need to worry about the marks. Commercial banking institutions, one of the big problems was Goldman Sachs was marking everything. It wasn't working out for everybody, okay, because they were short, everybody else wasn't. So or them and several other banks, who knows, right? But the point of this is, yes, they can continue this experiment. It can go on for a while, but at some point they're going to have to stop the experiment and kind of pretend like things are getting back to normal. So all of this confusion and delay, I don't quite know what it's doing for us, but ultimately it unstabilizes the markets. But really what everybody's realized is after the dampening effect of lower rates and monetary expansion in the last 8 years, and also prior to the financial crisis, we've seen that before. We see vol go to record lows. That's what happens. That's what happened in 2006 when the last time the realized vol was this low. So I've seen the movie before, and it plays out badly unless somebody decides to, like I said, and we all know what happened after 2006. You had 07, we had a real pop when everybody just got back into the market again at the top, and then we had the flush. So we'll see how it goes. Hopefully they somehow extricate themselves from this. Again, it's possible, but I think that's what we have. So it's hard for volatility really to go poorly unless something starts to go really wrong. I mean, there really has to be a run on something. Last year it was the rumor was China there's going to have all kinds of issues, and none of that materialized. So I don't know. It's again because central bankers can bury their own paper and they don't have to worry about it, or maybe there just was nothing there. It was a lot of worry and there was nothing there. And I think that's where we find ourselves right now. We're at that spot, and I don't expect really volatility to go back up. We're going to stay stuck in a lower volatility range for a while until there's a real reason for us to get out of it. It might be good earnings, it might be bad earnings, but at this point, we need something that we're not seeing on the horizon. And right now all I can see is a flat horizon line.
Well said, sir. I love your Topham hat references and talking about things that cause confusion and delay and perhaps destabilize things. We haven't had a lot of those candidates on the show over the past couple of weeks. Of course, Mylan infamously last week, and again today, rearing their ugly head. VRX over the past couple of weeks has just been popping up like crazy, just lighting it up. Today's addition to the, shall we call them the controversy names, is Herbalife raising their ugly head yet again. This one, what an ongoing saga. This one outpaces a lot of the other ones we talked about by quite a ways. It's been going back for some time. The will they, won't they dance. Is it a Ponzi scheme? Is it not? Depending on who you're talking to about out there. Icahn, is he going to sell his stake? Is he going to? Well, today he announces the heck with selling. He's going to buy more. So he talked himself down to a nice juicy price, and then he gobbled it all up, buying it today. So the stock gapping up about nearly 5%, ending the day about 4.6%, up nearly 3 handles on the day, closed about 63.30. Lighting it up on the options tape as well, averaging about 16,000 contracts a day, doing nearly 3x that, doing nearly 46,000 contracts today. So fairly aggressive paper. I see this, and Steve, I'm curious for you on kind of a tangible perspective, because we see this a lot whenever we talk about the VRX. We do it kind of by public demand. These kind of names, they're hot, they're contentious. People want to know about them, they want to debate them, they want to talk about them. It's just a lot of heat, a lot of fire, a lot of interest in these. I'm curious for you guys over there at Options House and a lot of the brokers in general. Is this accreting to volume in these names for you guys? Are you seeing a lot of client interest on the trading side as well? Or is it still kind of a lot of them maybe just circling a lot of the noise around these and maybe not really pulling the trigger?
Yeah, I think there's two things that are true. Talk begets talk, liquidity begets liquidity, volume begets volume, right? And you see a print go up or you see a headline come across any media source, even if we talk about it, right? And people say, oh, wow, maybe I should take a look. All of a sudden you get more eyeballs on a name. And then eyeballs sort of tighten markets, and liquid markets create more liquidity, because as more people are involved in the marketplace, the tighter markets get, the more the more volume that's going to create or attract, because the cost of getting in and out of those trades becomes less and less. So all of a sudden you look at this stock that who knows where this thing's going to be in a day, a week, a month, and yet the option markets are extremely tight right now. The stock market is extremely tight because 19 million shares are trading every day. huge amounts of option prints are going up. So it's a really easy place to get in and out of positions. And if that's the case, it does attract, I represent the retail sector of the participation in the marketplace, and that's just one sector. But if it gets really cheap for people to get in and out, that attracts more participants. If there's more participants, there's more liquidity, and the price gets even cheaper. The bid-ask spread gets even narrower. The price of trading gets even tighter, and it's an interesting phenomenon. Markets are phenomenal at determining value, at determining price. When you get everybody in a fair and even and electronic, easy access to the marketplace, if you get everyone involved, it's going to come up with the true fair value of whether it be the stock or the options relative to the stock. It's going to be the right price. So then what that does for the retail investor is it takes any kind of informational edge, any kind of pricing edge away from the market makers, another participant in the marketplace, and it levels the playing field. And if every stock could get talked about, and if every stock could just attract, whether it be rumor or news or fact or fiction, if it just attracts everyone eyeballs and gets markets as tight as we're seeing in VRX and other sort of name symbols, and active symbols, the markets would benefit from that. So I think it's a really cool phenomena. I think it's awesome that we do have these, we go from story stock to story stock. So even if the overall market is not necessarily moving, it hasn't necessarily been that, quite frankly, that interesting on a macro basis. And we talked about that at the beginning of the earnings season, where things were going from less macro, like Brexit, overall market's going to collapse, to stock-specific stories. That's the great thing about the financial markets, is there's always going to be a stock-specific story or two that will pique enough investors' interest to allow people to be involved. I think it's really cool. And now, now we have sort of the specter of Janet Yellen, and short-term interest rates rising. Well, what did long-term bonds do today? Yields went down again on the long term, on the long end. But what does that do? Are people fearful? No, the market was up 0.5% today. Financials were up 1%. An increase in rates and increase in short-term rates will increase the margins for some of these financial companies. So my feeling is the financials now, that sector is going to be the topic of discussion for this week, and we could talk about that a little bit later on in the odd block.
Speaking of the odd block, it's that time. Let's get to it. Let's dive into the darker side of the business with the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody. Welcome to the portion of the show where we take a walk through places that are even more dubious and dangerous than VRX and Herbalife and all that other shady stuff we talk about here. This is, of course, a portion of the show where we profile the interesting, the weird, the head-scratching, the bizarre, and unusual options activity that is catching our eye today, as well as some other days. Going to kick things off actually looking back to our last episode where we were talking about big lots, ticker symbol BIG, and we were highlighting at the time. Someone seemed like they were loading up on some juicy puts for the earnings that were coming out the next morning before the open. And in particular, we saw some pretty decent size going up. It was paper buying the set 52.5, 47.5 put spread, buying that for doing that for about 2,000 times total. Doing that tied to stock though, so doing that delta neutral. Fast forward a few days post earnings, the stock took it on the chin a little bit post earnings, and since has kind of seems to have solidified. Got down as low as about 50.5, then hovering right around 51.25 to close the day, though well off the close of where they closed on earnings day, where they opened, I should say, about 54.5. So they were off at one point over 4 handles. So that put spread was looking pretty juicy. It's still looking pretty good right now here, even though he did do it delta neutral. So again, not as good as perhaps he's probably saying to himself, ooh, if only I had left the stock leg alone. But that said, it looks like someone was inspired perhaps by that paper we profiled last week, Mr. Rock Lobster, because we're talking 52.5, 47.5 last week. Today we see 2,000 of the set 50-45 put spread. Looks like a vertical going up out there. Did this one catch your eye? And what are your thoughts here on a few days later, these big put spreads we were talking in big?
Well, oh my gosh, are these put spreads in big? I'm just looking at this from last week, and I am a little surprised. This isn't the put spreads that I wrote up.
There's all kinds of juicy good stuff here in good old Big Lots. But yeah, a lot of stuff going up today as well. I can tell from your tone that I have sucker punched you out there in the joyous land that is Maine. So I'll let you digest those a little bit. But it has been interesting to watch these put spreads going up, and again, more going up today. I don't have the prints on it exactly, so we will get to those forthwith in a little bit. But it seems like this has been an interesting one. Heavy pressure. Someone was speccing on some downside, and it looks like, at least in the near term, at least the options component paid off. The stock side, again, not so much. Perhaps regretting that addendum to their trade. As we move on to another big name, good old softy, ticker symbol MSFT. Microsoft closing today $58.10. Pretty much unched on the day, so not feeling all the upside love. But again, the tech-heavy names not rallying as hard today as the broad markets. And this name averaging a fair amount of paper, does about 100,000 contracts a day, very close to it. Today, doing a little bit lighter, doing only about 62,000 or so contracts today. So about 2/3 of their ADV. So clearly it wasn't underlying movement, or it wasn't net volume that caught our eye, as more as it was looking through the forest to find a few individual trees that caught our attention. This time it was out in October. Looks like a pretty tight strangle seller popping up out there in October. In particular, it was the OC 6055 strangle going up. When we started talking about it, about 1,000 times over there on the ISE in two chunks, shall we say. Mark straddle, but obviously different strikes. It's going to be a strangle. Total volume on both of those strikes is about 3,000 by about 4,200. So it looks like a bit of a ratio. Also worthy of note, looks like perhaps our friend here may be concerned by a little bit upside with this strangle component, because someone piled into those 62 halves shortly thereafter, or right around that time, for size, doing it about 3x, doing about 12,000 of those bad boys up there today. So interesting stuff out there in good old softy. We don't see a lot of size strangles going up in Microsoft, let alone ones with perhaps a call kicker. Actually, look, I'm looking again, those 62 halves, they were sold as well. So it wasn't a kicker. It wasn't perhaps someone speccing on a ratio to the upside. This is another narrative we're seeing raise its head now, Mr. Rock Lobster here. We saw a lot of these kind of last week, people just selling strips and selling stupids. Now someone apparently deciding to do it on a bit of a funky ratio. I'm trying to recall the last time I saw a strangle go up like this with an additional, not an upside call to hedge, but just to add more dark side juice. When's the last time you saw something like this, Mr. Rock Lobster?
I don't know. I'm looking at this volume, and it's 20 vol. That's an earnings month, and nobody cares. I mean, they're selling the 60-55 straddle now. There's a lot of open interest, but you have that much open interest and you're closing the straddle just 1,000 times. I don't think that makes a whole bunch of sense, especially if you're buying it to earnings and the thing's really not going to decay anyway. So, I mean, would you sell options that have a really small chance of decay? I mean, the 58, stock's trading 58. If it's trading 60, the 62.5 calls will probably still be trading 30 cents in October. There's almost no decay. So I just found this from an odd block point of view. this is the kind of paper, as you recall, that when vol's low and the market's not moving and people start reaching for yield and they just say, okay, Microsoft doesn't do very much, I'm just going to sell tons of juice for as little tiny prices that I can get. Even though this is earnings, they get nothing for this sale because the decay's truncated until until October. It's kind of a, maybe it's just a long holder and they just want to get whatever juice they can. But that's the kind of, I just want to get whatever juice I can thing. That's when we'll see if we see more of that paper. But that's the first sort of sell at all cost paper that I have seen, let's just call it this summer, where somebody's just hitting the sell button for what reason I can't really see.
Yeah, they hit the sell button and decided, I didn't hit it hard enough the first time. I'm going to sell a lot more of these on these 62 halves. I'm trying to think. I don't think I've seen that stratagem going up. If that is indeed opening strangle, and you're right, there is a lot of open interest on these strikes, so it could be potentially closing. But I'm kind of with you. It'd be odd to close out at such a small portion of these, and the 62 halves are clearly opening. So there's a lot to sink your teeth into there. Unfortunately, you got to keep rolling. We'll keep an eye on that one, though, listeners. I'm sure Softy won't go off our radar anytime soon here as we move on to good old Ducky MOMO. No, I'm kidding. That's a joke for the handful out there. You got it. This is MOMO Inc., an ADR. Ticker symbol MOMO, M-O-M-O, closing today right around 22 even, 22 and some change. And this one, again, about 2% on the day. So not a bad day here for good old MOMO. And this is the name that does, I'm trying to think of last time, I don't think we profiled this one on the show before, at least not for some time. This is the name that does about 1,800 contracts a day, doing nearly about 16,000 and some change today. About 4-to-1 calls over puts out here in Ducky Momo land. And what we found out here, it wasn't in SEP, it wasn't in the weeklies, it wasn't even in the OC weeklies. It was all the way out to OC, the regular old boring OC monthlies, where we found our activity of the day. In particular, it was the OC 2025 going up for a variety of different sizes, a bunch of chunks over there on the ISE yet again. Total of about 5,000 on 5,500 or so on the 20s, and about 6,000 on the 25s. Size open interest on the 20s, about 6,000 contracts open there, only about 1,200 on the 25. So clearly opening there. Looks like perhaps our friend here doing the old roll up. Like I said, MOMO closing right around 22 even, so those 20s clearly a bit in the money. Maybe our friend decided, hey, I got some money in my back pocket. I'm going to turn around and close it out, but I'm not going to go away completely. I'm just going to readjust to another strike. Sometimes when we see this, we see people doing more size as well. We did not see that. We did not see that last time as well here, but still interesting stuff. Mr. Rock Lobster, I know this one is lighting you up over there. I can see how excited you are. So have at it, sir. Again, it looks like a bit of a nice upside roll here. Someone's sitting on some money here in Ducky Momo.
Ducky Momo.
If you're not a Phineas and Ferb fan, you won't get that.
I am not. That's I just don't watch a lot of. Actually, I just should say I don't watch any TV. Anyway, but this was I don't know if you remember, but I think we profiled this not long ago. I think Sebastian wrote it up. There's something about the 1520 Ox Strangle for I think less than $2, and they are rolling this spread for a $2 credit. So they get their juice for free. They rolled this up, and they want more upside. This is one of the few stocks where the implied volatility is less than the realized vol recently, meaning the stock's just moving all over the place. It's up like 70% or something in a month. So whoever was smart enough to get in this with a strangle, they are rolling up and staying long. That's what I see there.
I see it here. We didn't do it on the show. We did it on the website there. Again, we do a lot of UA on the site that is not on the show, listeners, in MOMO. But a week and 5 days ago, it went up. Again, strangle sales out there in October. So they're continuing to add fuel to the fire here with some interesting juice out here. And continues to be where the action is for Ducky Momo as we move on to, I remember that one if we talked about it on the show. Clearly I would, Mr. Rock Lobsters. Like, clearly we did not. All right, one of my favorite characters over there on that program as we go on to our final victim here in the old odd block. This is good old Genworth Financial, ticker symbol GNW. Closing today up, not a bad day, up nearly 7% for Genworth, still shy of the $5 handle. So if you're looking for a resident cheapy name here in the odd block, well, this is going to do it for you. This one, $4.93, again, up about 31 cents on the day. This is the name that does, about nearly 5,000 contracts. Not bad for such a cheapy name. Today doing nearly 30,000 out there, about 6-1 calls over puts. That should tell you where our attention was drawn and where the size was going up. In particular, what caught our eye out here today were some SEP calls. Lots of SEP, lots of weeklies out here rolling around in SEP out here in Genworth. But it was once again, regular old monthlies that caught our eye. Initially, 500 or so of the SEP 5s going up on bats for 20 cents. Paper gobbling those bad boys up as the day went on. A total of about nearly 3,000 piling in on this strike. So clearly looking at some interest, looking at some love on these levels. Even saw some activity all the way up to the 5/2 out here as well. It was a call palooza out here in GNW. Looking back at some recent history in Genworth, this thing has been on a tear since just the beginning of the month back in August when it was trading in the mid to high 2 range. And again, nearly doubling since then or close to it. So it's been on quite the upside tier. And apparently, Mr. Rock Lobster, we didn't see any stock or anything else going up with this. That would be odd in such a cheap name, but we've seen odder things. That said, looks like someone's betting that the party shall continue, sir.
The party continuing in some sort of a big way. I'm still trying to decide whether they try to close some of this out. It looked like they were kind of piling in, though, as the stock is trying to break out with the rest of the financials. And there was just a lot of 5 action, paper buying the 5.5 calls, just goofy stuff like that. Who buys the 5.5 calls in a little junky bank stock like this? So there's just action in September. It was either closing some of the 5s, which is generally when call riders close their calls early. That's usually a little bullish sign because people think stocks are going up, so they're going to close their short calls. Of course, the goofballs that are buying the 5.5s, they could be right. So again, it's kind of like that at strike action, which I always find interesting when a stock gets here. When things get to even numbers. Genworth was kind of in the doghouse for a while, and I recall it being a much higher price stock than it is now. And it's trying to come back. I mean, what was it? 2 years ago, it was like $16, $17. So we will see if some of these financials that are sort of, I guess, the walking dead of the financial crisis can come back and move. And it looks like some paper is a little overly active in September for the name. Like, this could be the breakout. So we'll see if it materializes.
Yeah, Andrew, I'd pile on to your thought in that a lot of people are looking at these financial stocks in what they maybe anticipate, hope for, a rising interest rate environment that that really does benefit the financials. The interesting thing on Genworth, I think, is it's a $5 stock, sub $5 stock, and a lot of folks have come to me and said, "Hey, do options even work on the same sort of strategies? Do they work on low price stocks?" Because the premium as a percent of the notional could be, it's going to be relatively valued and fairly valued. There'll be buyers and sellers, as you see, but in fact it does, right? I mean, if you look at these buying the $5 calls for September, given all the data that we have, given that the Fed has specifically said we're going to be data dependent and the rate hike may come as soon as our September meeting. the 5 calls at 20 cents. 20 cents as a percentage of $5 is about 4%. So I mean, the stock replacement strategy that I talked about last week with our customers on a webinar, it still works with a $5 call. It's pretty interesting, I think, in that a 20-cent option is a lot cheaper than a $5 stock, and you have a downside hedge, plus you have potential upside. You're only spending 20 cents. It's it's a cheap bet. We saw some likewise in September 2nd, this Friday after unemployment. We saw some XLF calls go up, cheapies as well, under 10-cent calls that are about 10 cents out of the money, and they went up at 10 cents at 24.5, expiring this week. So yeah, I think people are taking cheap shots on financial names, low priced or not, using the options so that they have a downside hedge, right? You can't lose more than 100% of what you pay for a call. And that 100% of 20 cents in Genworth's case is, only 20 cents, 4% of a $5 stock. And earlier in the big lots, if I could just go back to that one, the reason that those go up delta neutral is the liquidity is not present in the options in a company, in a stock like big lots. And so a lot of times if you tie it to stock, you'll get a better option print, and then you can easily take off the stock, or you more easily take off the stock if you want to have just that put spread on. And I think that may have been what the case was with the stock hedge. I think that was likely just an execution mechanism that folks used in order to get a better price on the put spread, to take that delta risk of the transaction itself away from the counterparty, away from the other side, and then the person that owns the put spread can of course just sell to close the stock that he bought against that put spread when he initially transacted it.
That's a good point. I think a lot of people are not familiar with kind of the execution side of the business. Maybe we should spend some time illuminating that more here on the show. But you're right. The stock leg often acts as kind of a third leg, primarily for price adjustment. You can do a lot of things. That's why sometimes we talk about trades going up on splits. Listeners, they do different funky prices. Sometimes they'll reflect those prices in the stock as well. They'll give you a worse price in the stock for better on the options, or vice versa. So it does give you a lot more nuance in how you execute that. So that's a good point. Maybe we should spend some more time exploring that on a future show. It's interesting stuff. And of course, the topic of our options on cheap stocks, are they even worth doing? I can see the Viceroy's ears getting red at the very notion of that, but that's a hot topic on the show. We'll get into that, but it's Monday. It means it's time for you guys to take the reins and get into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, you guys know the drill. This is the portion of the show where you guys can chime in with your questions, your comments. No shortage of ways to do that. The website, Twitter, Facebook, everywhere you guys like to do, including the live chat. We already have the VRX people chiming in today. We had, let's see how much time we got to get into these. Let's do a quick one, and then Mr. Rock Lobster, you're kind of people are hitting you up on the thing today as well. So we'll do a combo here. First off, there's a live one coming in from Hemant Verma. He or she wants to know, what's the best way to trade diagonals on VRX? And I'll give you, since we're running out of time, Mr. Rock Lobster, I'll give you a combo. This also comes from Jesse. He's a new listener. This is an email. He says, so I am loving, in caps, loving the optionsinsider.com. Wish I had discovered you a long time ago. Well, welcome to the party, Jesse. Better late than never. He goes on to say, you were asking the Rock Lobster in a listener feedback, and you mentioned something like, quote, even though you get all your juice for free, which is something I say all the time. He goes on to write, was that a pop culture reference, or is he somehow buying call options for free, or just super cheap that it seems free? Do you mind clarifying? Thanks for the great shows. Well, congratulations on your excellent taste, except for the Rock Lobster, Mr. Jesse, in discovering the show. So you got a lot of content to explore, so enjoy all of that you have ahead of you. Mr. Rock Lobster, a couple of quickie ones here. Then everyone else can chime in. First off, I always joke with you about getting your juice for free. I say it's going to be the title of your book. You don't mind buying options, but you don't want to pay for them, which is an odd scenario. So walk our listeners through what the heck I was talking about here. And if you have any thoughts on VRX, feel free to chime in as well.
Okay, so where this comes from was, as a liquidity provider, you get handed a lot of mishmash of positions. So just long story short, you're taking the other side of paper all over the place. So you end up with some oddball positions. The oddball positions, sometimes you ended up with net long contracts, but positive theta, meaning every day that kind of goes by, all things being equal with vol, your book of positions was throwing off positive decay, yay for you, and you were also long contracts. So if something blew up, you actually made money on a huge move. And so what I would say is, looking at even diagonals on VRX, what I try to find are ratio contract positive diagonals, meaning you sell a couple contracts closer to the money, but you buy more contracts of a farther term out of the money. And you end up setting up a diagonal. So depending on the vol curve, what the vol surface looks like, that's just a fancy way of saying, if the vol is really high in the front and it's really low in the back, you can work into one of, and I don't know, there's at least a dozen or 2 dozen ways to have positive contracts with positive theta if the vol conditions are right. And I think that's the big thing. Obviously, that's the educational part, but that's when it's a very advantageous position where if I have an opinion on a stock, and VRX, I don't really know where it's going. It doesn't look like it's going to go bankrupt. It doesn't look like it's going to go to zero. And they could have an asset sale, which could jack the price up a little bit. Take that what it means for where it goes. But as far as trading it goes, if I can own contracts for net positive theta via ratio diagonal spreads, I want to. Again, if that sounds complicated, there's not much I can do about that. But essentially, as you sell contracts kind of closer to the money, but you're buying more contracts out of the money. So if you do get the big move, the net long contracts will make you money. You just have to price it all out and make sure that it works for you. But that is one way to buy your juice for free or very low cost. There you go.
Yeah, some of the things that I've talked about on the show with my SPY diagonal strategy, I'm not doing this right now, but if I buy a longer term call option as a way of participating in the market to the upside, one of the things with which I'll do to the near term is to sell a put spread maybe 1 to 2 weeks out, so that way it'll give me some time decay. So the time decay that would go away in the 6-month call option, let's say, from 1 to 2 weeks, there'll be a little bit of time decay, but nothing significant. So what I'll try and do is sell enough put spread to make sure that it's either not a lot of time decay or a minimal amount. And that's one way of paying for the juice, so to speak. And then when we get closer towards expiration, then maybe I'll roll it 1 to 2 months before expiration, because the closer you get to expiration, typically the more time decay hurts you. So there's a lot of ways to do it, like Andrew said, and there's this company called the Option Pit, I think it's called, that you can learn about it from even more.
Option what? Pit? Option Pith? The Option Pith?
Something like that.
The Option Pite, I think is how you pronounce that, P-I-T. All right, we're running up against it. We have another question that's been in here. It's been in our docket for a couple of weeks. Someone sent it a couple of weeks ago. I feel bad. We keep running out of time to talk about it. I want to do it when you guys are on, Steve, because I want to have a broker's perspective on this, because it's kind of an interesting question. This comes from Cbon. He or she asks, what's the one specific feature or platform element that you think all options brokers should offer? Mine is an easy drop-down menu for multi-leg spreads. Have you tried entering spreads, particularly ratio spreads, on some platforms? It's a nightmare. Good #Brexit shows. We're glad you like the Brexit stuff, Mr. Cbon. I'm with you on the ratio spreads. That's kind of a little litmus test I like to do, where if you try to do like Mr. Rocklops's version, or just the old standby, buy one, sell two, or vice versa, or sell one, buy two, or whatever you want to do, it's a nightmare on some platform. I haven't actually had a chance to do it on the OH one. That's a good question, man. I'll kick the tires. But for me, ratio spreads aside, the one feature I like to see, it's actually one I think you guys talked about it a couple weeks ago, Steve. The one thing I think every broker should offer, and if they don't offer it, I instantly ding them, is it's not so much a tech feature as it is kind of a platform execution feature, which is incentivizing clients to buy back those naked shorts that are out there when they get below a nickel or around that nickel range. If the firms who still hold on to nickel and dime you to get that full commission when it's, a closing out for a penny, I hate that. You want to incentivize people to take that risk off the books. It's good for you. It's good for the customer, good for the broker, good for everybody. Make sure they do it. Incentivize them. So I like to see that. I think, Steve, you guys offer that, so that's a nice thing. One of the reasons we like having you on the program, you guys actually offer that. But that said, this is probably a question you guys get a lot. I'm curious, you being the broker rep, what would you think is the answer to this?
Yeah, I definitely promote and pat ourselves on the back for our dime buyback because it's 10 cents or lower. Is
it even a dime? Some people do nickel.
Yeah.
I draw the line in the nickels. I don't want to give them a hard time about a dime. I prefer to see a dime, but I'm glad to see you guys go that way.
Yeah, and I mean, when it's a dime, it's pretty much mostly risk and very little potential reward left in a short option at a dime or less. And so a dime or less, we don't charge you commission. So that's obviously something that our customers have really benefited from, and conveyed as being a wonderful value prop. But more, quite possibly more. Along the lines of what Seaborn is thinking is how simple and fast execution and how simple and fast creation of spreads, and he calls out the ratio spread and the Rock Lobster talking about diagonal ratio spreads, especially how quickly you can create the spread, how quickly the thought in your mind can get into the marketplace and working, how the real advancement in technology, and especially in the options house, if I can be self-promoting for a moment, technology is how fast the execution is, how quickly you can move from idea in your brain to into the marketplace. And we have something called bid-ask trading, where from the option chain, you can simply click the strikes that you want to sell. Click on the bid if you want to sell that leg. Click on the ask price if you want to buy that leg, and you can create a four-legged spread with four quick clicks from the chain, seeing the chain in front of you the entire time. And I've not found a more simplistic, easier to use method of getting any type spread, any type of custom spread on. And as well as we do have, it seems like Seaborn likes to have a pull down menu. We have a pull down menu as well that you could select the strikes from a pull down. I find that it's just better to just click on the leg that you want, and create your spread straight from the chain with one click. I think that's critically important. And then at Options House, of course, we have what I feel is the best position management screen for options, which shows, you can take a top-down approach to managing your option portfolio using a concept called dollar delta. And we don't have time to necessarily go into that probably right now just on this question, but being able to look at your amount of dollars your deltas are expressing and have is much more important than share delta when you're looking at multiple symbols, because you can add up dollars. You can't add up shares of Microsoft with shares of Valiant, with shares of Google, with shares of Apple, because they're all, a share of the different value in each of those underlying stocks. But if you look at the dollar delta of those positions, then you can look at your entire portfolio and manage your risk from a top-down approach, which I think is critically important for success.
All right, thank you for that. We, as we like to do here on the old Monday mail block program, we tend to run a little long answering your questions. So that music means once again we have come to the end of another epic journey, another epic sojourn through the world of the option block. Before we go, as we touched on at the top of the program, it is a pretty heavy data week for our friends over there at the Fed. They said they wanted data. They're going to get it, including the big seems like we just did non-farms. We're back in that dance already, doing non-farms again. We'll see if non-farms this week can really be kind of the mover, the shaker, the surprise that it has been of late. If you get another good number there, it may be hard for the Fed to sit on their hands, even with all of these other macro factors weighing against them. That said, Steve, you wrote the blog all about the Fed, so I'll let you go first. We'll do a combo around the block as well as what's coming, what you guys are working on. So let's start there. Tell us a little bit about your thoughts on what's coming up for the rest of the week, including the big numbers the rest of the week, and then in addition to all the stuff you just laid out, what are you guys working on? What are you guys cooking up over there in the land of Options House?
Yeah, this week, definitely, we got a lot of numbers. Earnings season pretty much over, so now we're going from specific news to more macro again. We've got ADP, we got payrolls, we got ISM, we got non-farm on Friday. So, yeah, data, non-farm payrolls is the biggest trader's number, the first Friday of every month. Over 180,000 is going to be considered, the job market is hot, and that will give Yellen another arrow in her quiver for another reason to potentially move on rates. And so XLF, I think, is the sector to sort of focus on this week. And if anyone does want to see how easy it is to look at the options or to use the Options House platform, please come to optionshouse.com/webinars. We have orientation webinars all the time, essentially for our new customers. But if you're a prospective customer and you want to see what the platform looks like and how you interact with it, feel free to come to those webinars. They're free to the general public, and we would love to have you take a look at our platform. You can try it out in paper trading. You can see how easy it is to create spreads. Definitely encourage you to come and check us out.
There you go, check them out. And Steve, we will have to do the ratio spread test as suggested by Siban on an upcoming episode. 'Cause I haven't done that myself, and I'm always kind of curious how all that works. That's always a fun spread to try things out on. All right, let's turn our attention now farther afield to the hinterlands of Maine. Mr. Rock Lobster, what are you watching for the rest of this week, and what is cooking in the land of the pig?
This stupid Fed stuff, whatever. Yes, we're watching it. We were wondering if VIX really we're seeing the same kind of pattern, like the vol kind of falls apart by the middle of the week, then gets a bit at the end of the week. How low do we go? Do we have a settlement below 12? There's not a lot of earnings coming out. And we do have a non-farm payroll number, probably the last decent chance to sell some like September 02 juice today or tomorrow. And we'll see, but I think, I don't know. Mark had a good point today. The Fed is volatility right now, and we are stuck now with 8 years of QE nonsense that they're driving the vol. So that's what we have. So that's a good metaphor. The Fed is vol. So if you think they're going to do uncertain stuff, vol's going up. If they're going to just be quiet and do the same thing, vol's going down. So that's what we got.
The Fed is vol. I like that. And last but not least, Mr. Uncle Mike, what's cooking in the land of RCM Wealth Advisors?
Continuing to watch silver just to see if we get a little bit of a pop. That's the only thing based on today. Continuing to watch the Fed and just all the announcements this week. And we still have not hit the 2,200 mark yet in the S&P. Curious to see if we can string another big day or two together to hit that mark this week. In terms of what's happening over at RCM, if you are interested in working with a financial advisor that is not afraid of options, not saying that options are appropriate for everyone, because they're not, but in case you are wondering if there's a financial advisor that exists out there that will work with you for only a couple $100 a month in terms of an investment, not a fee, an investment, feel free to contact me at m2saw@rcmfs.com or 312-212-3531.
There you go, Uncle Mike. You and I will have a debate on a future show. Options are appropriate for all people. So we'll get into that debate. Retiring tomorrow, options. Retiring 20 years from now, options. I don't care. I'm just giving you a hard time. We'll debate that on a future show, because we are all done for today. And on behalf of Uncle Mike and the Rock Lobster and Steve, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing. And, of course, for joining us live. We love you guys, too. Hope to feature more of your live questions. Didn't get to all of them today, but we love you guys chiming in. If you like what Steve was talking about over there at Options House, check it out for yourself. optionshouse.com/insider to learn more and to check out all the cool stuff. Of course, you can always get access to Steve's webinars and everything else they're always talking about there. Some well-timed ones over there. I like the SPY dividend one. That was a pretty clever idea. More of that kind of stuff. And, of course, take advantage of the dime buyback while you're there. Not even a nickel, a dime. All the way up to a dime. So take advantage of that. And we'll see you right back here on Thursday for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.